if consistency was a person, then that will be Mansa-X Special Fund, specifically the Kenya Shillings Special Fund. Why am I saying so? They did release their Q1 results, their Q1 performance, their Q1 fact sheet, and I'd like us to have a look at this fact sheet and see certain lessons that you can pick from this performance. Now, why did I suddenly gain some interest in special funds? Because special funds are managed by professionals. Special funds has invest in a mix of high risk, not high risk, but high return investments, which then also means that these high return assets also carries with them high risk. Now, a special fund will be a good example on how we can mirror our investment as well, our investment portfolio or our investment strategies. We can borrow certain investment strategies from special funds, which we might not have in money market funds. Why? Because MMF primarily invest in low risk assets. There can only be one strategy in investing in treasury bills. There can only be there can only be as much strategies when investing in fixed deposits. These are low risk investments. You don't need to leverage on options and forwards and what have you. You know, these are limited investments. I mean, the risk is quite minimal, that the risk mitigation is not as intense as that of special funds. So I have a keen interest in analyzing and studying these special funds, how they manage their business, how they manage to earn these returns that they're paying us. Okay? Like for instance, Mansa is, in Q1, Mansa paid an annualized return of 19%. The treasury bill is paying a return on investment of 11%. The treasury bonds are now at a 14%, which is actually going to be sold at a premium, and they're at 12% or even 13%. Yet these special funds are still paying us highs of 19%. So how are they able to perform their businesses and pay us this return on investment of 19%? I can tell you for a fact, many of us fear going into Forex because we are afraid we are going to lose money, or we might lose money. Why? Because Forex trading is a high risk. Many of us fear trading in shares, in stocks. Why? Because we know that it's a volatile investment, it's a high risk investment, and there's a possibility that we could lose money, we could make capital losses, or we could miss out on dividend payments if we choose companies that don't consistently pay dividends, or even the dividend payouts could be low. All right? Many of us fear investing in foreign markets because we don't know when you're about to be scammed. Okay? Yet these fund managers have this knowledge, have this experience to put their leg in these places that we fear investing in and give returns on investment. I keep looking here because I have my laptop here, and I have managed to tabulate the return on investments that this fund, Mansa, has been paying since 2023. And it is mind-blowing. The consistency is mind-blowing. I'll do another video tabulating their return on investment since when they began, if I manage to find that information online. If I don't, I'll get in touch with them, and I hope they'll be willing to share that information with us so that we can share. I would like to see when they made losses or when they return maybe 0.5%. I'm so curious to see what their quarterly return on investment has been like since this fund was licensed or what it was conceived. Anyways, in 2023, these guys reported an annualized return on investment of 18% in that year. And last year, 2024, they reported an annualized return on investment of 19.53%. But how have they been reporting quarterly? Because they do quarterly reporting. Now, in Q1 of 2023, they reported an annualized return on investment of 3.99%. That was low. And then in Q2 of the same year, they gave us a return on an annualized return on investment of 4.7%. And then Q3, that was reduced a little to 4.63%. And then in Q4, it increased a little to 4.69%. Right? Awesome. Now, how did they perform in Q4? In 2024 rather. In Q1 of 2024, they managed an annualized return on investment of a 5.62%. And then in Q2, they gave an annualized return on investment of 4.99%. And in Q3, they gave an annualized return on investment of 5.14%. And then that dropped in Q4 to 3.78%. So now, do you see what I mean by past performance is not an indicator of future performance? Now, in 2025 Q1, they have started off the year with 4.89%, which is an annualized return on investment of 19.56%. So if they were to retain this consistently throughout the year, it is difficult to retain 4.89%. However, hypothetically, if they were to retain this consistently throughout the year, then essentially they have performed better in 2025 as opposed to their annualized performance in the year 2024. I am not saying that this is what their return on investment is going to be like for the year 2025. What I mean is in Q1 of this year, if they were to retain, this will be their bare minimum performance throughout the year, then they have performed better than their performance in 2024. But we know that that is not going to be the case. They could actually report higher or report lower. But what we are seeing in the past 9 quarters is that they have been consistent with their performance with a marginal increase in certain quarters. Their worst performance in a quarter was in 2024 Q4, which gave them a 3.78%. And the best performance was in Q1 of 2024, which gave them a 5.62%. Now, these 4.89% that have been reported in Q1 of 2025, is it going to be one of their best performance in Q1, or is it going to be one of their worst performance in Q1? That is for us to sit and see, but I highly doubt this would be their best performance this year. So this is the performance history of Mansa-X Special Fund over the past 2 years. I will review the earlier year so that we can see how their graph is playing out. Is it a climb and drop kind of graph, or is it a steady graph with small hitches but always on a steady performance? I mean, how does this performance graph look like? I will review since inception, but ideally, this is what I wanted us to see today in this video. Now, looking at their assets, looking at other facts of this fact sheet, is the growth in their AUM, assets under management. They're presently managing 47.29 B. I'm yet to cite the Capital Market Authority's data on the different asset managers. I would like to see if they have risen their present market share, and I'll tell you also in the next video or in another video why the market share of a fund manager is of key interest to me. I have seen a fund manager that dominates the market but paying very low on their MMF. Even when the rates were high, where the T-bills rates were high as 16% or were high at 18%, this fund manager was almost paying a single digit return on investment, interest rate on the money market fund. These guys, Mansa, with the AUM of 47 billion, is doing exemplary well with their performance. Okay, I love the consistency. I love the risk mitigation strategies that they have put in place, and I love that they have shared it with us. In fact, in my next video, I'm going to be sharing with you their risk, some of the strategies that they have put in place. I know they have not disclosed everything, but whatever they have disclosed with us in their fact sheet, we are going to be discussing them, because these are some of the strategies that I need to adopt, or that you need to employ at your individual level with your investments, okay, or with my investments. Because I mean, if these guys are able to take up investment in such high risk assets and still manage to give positive returns, then it's a risk mitigation strategy. It's a risk management strategy that is worth looking at, right? My name is Berlin. Thank you once more for joining the Wealthwise community. Please don't forget to press the subscribe button if you haven't subscribed, and let's meet on the next video.